Markets with David Modell.
Welcome to Looking at the Markets with David Modell. Today we have back on Looking at the Markets one of my frequent and, of course, most favorite guests. He is Mr. Lior Gantz from Wealth Research Group, and we have so much to talk about as we begin a new year, 2018. So, Mr. Gantz, welcome back to Looking at the Markets, sir.
Hey, thanks for having me.
Always a pleasure to have you. Man, so much to talk about. All right, let's start with the Fed, one of our favorite topics. The Fed is tightening. So what does it mean? Will this cause inflation? Could it cause a recession this year? What are your thoughts on that?
I think, David, this is a very risky situation right now for the Fed because, and you know this as well as I do, for about 9 years now, people in the gold sector, what we call the gold bugs, right? Mm-hmm. They've been talking about the fact that accommodating or quantitative easing and zero interest rate policies, that is what causes inflation. And it has the reverse effect. If you think about the psychology of humans, when you tell someone, hey, we're lowering interest rates, now what does that tell him? That tells him, hey, if I want to borrow, I could just borrow in a year from now when it's cheaper. So basically by lowering interest rates, what you're causing people to think is, I can wait. I don't need to spend money right now. Spending money or borrowing money will be cheaper in a year. And so lowering interest rates is very deflationary for individuals, but very inflationary for corporations, because corporations, they don't want to wait. If they can borrow cheaply right now and make money, they're going to do it. So what you saw is an inflationary borrowing spending spree with corporations. You saw share buybacks at an all-time high. CEOs borrowing at very low rates and then buying back shares of their own companies, propping up earnings per share and fueling the stock market. You saw that with commercial real estate, and you saw that obviously with anything that has to do with institutions, pensions funds, etc. You didn't see it with the private with individuals like you and I. We have decided not to take on borrowing costs as a group, as a whole, in the last 9 years. And I just told you the reason. Another thing that's important is that when the Fed is creating quantitative easing, what it does is it buys assets. It buys bonds. And when it buys bonds, it becomes a bigger part of the GDP economy. So right now, the Fed owns about 23% of assets in the United States in terms of assets of the GDP. Normally, that's about 6%, the bonds that the Fed owns. So it's important to understand that the Fed is going to shrink its balance sheet right now. And what that means to investors is, hey, we're going back to normal. We're going back to normal levels. You can rest assured that the economy is good. So what businesses will do is hire, and they will raise wages in order to compete for quality employees. And what individuals will do, because this is a tightening period and has been for 2 years, they're going to start thinking, well, hey, the Fed is now not bullshitting. It's tightening interest rates. It's going to increase interest rates in one quarter and again in the next quarter. Maybe I should take on that mortgage right now before the yield that I bank my interest is going to get higher. And so this actually is a very stimulative part of the cycle right now when they're tightening. What can they do wrong? So if they tighten faster than the real economy, they're going to create a recession. In other words, if the synthetic interest rate, the Fed fund rate, which is a synthetic interest rate that they choose, if it surpasses the 2-year and the 5-year bonds with regards to yield. So in other words, if the Fed prices the interest rates higher than the safe haven assets for the world, the U.S. Treasury, which is what foreign governments buy, then this signals to foreign governments, hey, the safe haven is not as it doesn't yield as much as the synthetic interest rate. What should I do? And then that causes a recession. It always does. If you look back at history, every time the Fed has tightened and the synthetic interest rate surpassed the 2-year and the 5-year yield, the economy stalled. So that's one thing they can do wrong. If they tighten too slow, then the economy will spend, and you will get into a very inflationary period, even 5 and 6 and 7% inflation, which is very bad for an economy as developed as the United States. Yeah. So that's two things they can do. The other thing they can do, the third thing, is that, and I don't hold my breath for them to do that, is to get that tightening cycle exactly right. So not make any mistake. So if you think the Fed will make a mistake, it's going to be inflationary either way. If they tighten too slow, the economy goes into recession, they're going to have to ease again. People will lose confidence and then start spending. If the other way goes around, they overheat the economy, and then commodities and raw materials, they spiral out of control because companies will go out of their way to spend and invest in their own businesses, infrastructure, etc. So either way you look at it, we are now through with the deflationary period of the cycle for the last 8 years, with this accommodation, this leveraging that we've seen. And now we're getting into an inflationary period. Demographically, we're also hitting inflationary years because the millennials are hitting their peak earning years. So they're starting to get into better careers, better jobs, more income, etc. They're going to have more spendable income. And that's the part of the population that doesn't own home and that doesn't have a car or an electric car, and it needs to spend. It's in that part of life where they need to spend, like the baby boomers were in the 80s and 90s, where we saw those last booms in the United States. Sure. So going forward, that's something really big to take note of. And with regards to copper, for example, specifically copper, this commodity in an inflationary period, this is the commodity to watch. So that's also something to take into consideration, because electric cars, they consume double the amount of copper that goes into conventional cars, and the trend is the fastest growing sector of the economy is electric vehicles. So that's something to also pay attention to.
Yeah, sounds like there's a lot to watch in 2018, and it may look very different from 2017, and not necessarily in a good way. But that's something to look out for sure. Now, moving on to the international scene, we spoke before we started rolling on the video that China has decided to increase its credit cycle and possibly go further into debt, even in order to stimulate their economy. So what do you think the implications of this policy will be?
Well, an economy with the situation that China is facing has two choices. They can either start austerity measures, which will restrain borrowing and cripple their middle class for making expenditures, but they will have lower debt levels, and basically they'll go into a deflationary period, or they can go into a real debt cycle, like the U.S. has gone through from the 70s, 80s, and 90s, where they allow the growing middle class at that point, or the growing spending population, to borrow more and expand the economy. Now they know that the price they're paying is higher debt loads, but what they're doing is they're denominating the debt in their own currency, so they can monetize it later by printing more of it and inflating it. In other words, what they're doing is what the U.S. has pioneered, which is creating debt and then inflating it away for their own citizens, leaving the world with a huge problem. It's irresponsible, but that's what they chose to do. So how do you play this? What do you do? Right. In China, the middle class is not like in the States. The middle class in China is a 300 million people class. It's the size of the United States population. But their yearly wages are not there yet. It's not like it's on par with the U.S. So they don't have homes and cars, etc. They can really create growth for the global economy. If you try to stimulate an economy like the U.S., you're going to get 3%, 3.5%, because it's very developed. If you stimulate an economy like China, where people, they don't have wiring, electrical wiring for their homes, and they don't have smartphones, and they don't have many things, you're going to create 7 and 8% growth. And that's what we saw between 2000 and 2008, when all of these commodities like copper, zinc, uranium, oil, they all went through these ballistic supercycle mentalities. And that's what we're going to see going forward. So in the next 5 years, 2018, 2019, 2020, 2021, 2022, you got about 5 years, if you're in the U.S., to align your portfolio in a way that when China surpasses the U.S. or comes at par with it in terms of who's the biggest economy in the world, and then they're going to make much more demands on how the U.S. treats their dollar. You got 5 years before the middle class in America goes through this pivotal change and basically becomes part of the lower class. So these 5 years, you're going to determine where your portfolio will be. And in terms of what Wealth Research Group sees is this huge opportunity with natural resources. And the underlying theme is that industrial commodities have gone through a sustained bear market. And then gold has bottomed 2 years ago. And it's gone up 30% since then in 2 years. Right. And gold companies or gold stocks have lagged. Now, usually, if you look at the historical patterns, about 80 weeks into a gold bull market, the gold stocks start to move. The copper stocks start to move. We're at that tipping point right now. So we're 81 weeks into the bull market. And therefore, what I want you to take from this, David, and your listeners, is that the brutal bear market for the shares, for the junior mining sector, is probably nearing its end, and you can see that in the last 10 days. In fact, go to wealthresearchgroup.com/inflation. You'll see our thorough report on a company called Cucho Copper. It's a newly listed company, and it's up 50% today, trading today. The big reason is that Wheaton Precious Metals, which is a huge $10 billion masterpiece company, have taken a big position in them, and the market is just recognizing that this this tiny company has probably a motherlode asset that is intriguing to the big players. And this is what fuels speculation in the gold sector and in the copper sector and in the zinc sector. When big companies take positions in a small company, that creates merger activity, and that entices good behavior from all the players in the marketplace. And so that's something huge.
Sounds like it. And so that link, again, that's going to be in the description below this video. Check it out, everybody. wealthresearchgroup.com/inflation for that report. And, of course, you just want to check out wealthresearchgroup.com, the homepage, and look for all the free, that's right, free reports on there. There's not a big paywall where you have to pay all kinds of money to get these premium quality reports here, so people want to check that out. And speaking of Wealth Research Group, I remember that on your website, we're going to talk about cryptocurrencies here, hot topic always. On
Sure.
December 12th, Wealth Research Group covered Ripple at 27 cents. You were highly bullish on it. Now it's $2.50. That's, talk about a good call there. So let's look to the future, though. What do you think is going to happen in the next year and beyond with cryptocurrencies in general?
Well, the amount of work and research you have to do right now with cryptocurrencies is much different than in the beginning. In the beginning, there were mostly, all of them were under priced. So when a new coin came out, it was priced at a cent, or the market cap of the entire coin was next to nothing. Now that people understand that that a coin which has a legitimate use case, which solves a legitimate problem, whether it be remittances or global transfers in seconds, or whatever it happens to be, it has real value. And so currencies or coins get repriced very, very quickly. if they get de-risked by having institutional ownership coming in and investing in them, then they get really de-risked. And when they get to that stage, they can move parabolically in like 3 weeks. So with Ripple, for example, we saw a lot of Asian companies saying yes to their technology. And as you know, the Ripple is working on changing the SWIFT system for banks and creating a new system. Now, I've already taken profits on my Ripple because it's up 1,000% in 3 weeks, and we're moving on to our next top 5 cryptocurrencies for 2018. David, in 2017, we covered Dash at $30. It's over 1,000. We covered Bitcoin 400, went to the moon.
Yeah.
Ethereum at $12, it went over 700. Litecoin at $20, it's over 300. So there's been amazing gains for subscribers, and I got all these pictures that subscribers send me from snapshots of their gains, and it's exciting to see. But 2018 is a whole different ballgame.
Yeah.
Because now it's really about finding who's really good, which coin is really good. You're not going to see those speculative gains in all across the board. You're going to get the bad ones are going to get punished, and the good ones will see a lot of adoption. Now the community is so large, the good ones will really see an influx of money into them. So I call 2018 the year of 1 month, $0 to $1 billion market cap moves. You're going to see new coins coming in at 0, boom, going to $1 billion in a week or a month. So it's going to be very exciting. We are in 2017. We took about the last quarter, the quarter and a half, and really went through the list of the top 100 cryptocurrencies to find the top 5 for 2018 that we feel are have the most potential for creating Ripple type gains, in Q1 and beyond. And we're going to publish that in the newsletter on this Friday, so on the 5th. So you can go to the Wealth Research Group site and sign up for the free newsletter. As you said, one of the things that I wanted to keep with Wealth Research Group is the fact that everything is has no threshold to get in there and get access, because our goal is to educate the subscribers. So if you sign up, on Friday, that report on the top 5 cryptocurrencies is going to be published. And what I want people to remember is this: don't compare any of the cryptocurrencies to gold. It has no connection with it. Gold is a safe haven for thousands of years, and it will be for thousands more if society needs it. Cryptocurrencies should be treated like startup companies, tech startup companies. So they're very speculative. Most of them will not be around, but the good ones are here to stay, because blockchain technology is here to stay. This new sector is here to stay. It fills a void that is important. It helps international trade. It helps to move away from a trust economy, where a lot of things can go wrong at a centralized point. And so what you need to focus on is which companies can endure and thrive. You saw that in the NASDAQ rally, where a company like Cisco is a company that's worth $180 billion today, and in the 90s it went up 100 times. So it didn't blow up in the NASDAQ rally. It took a correction, but it's still around. The internet is still around, right? Mm-hmm. So a bubble, when it inflates, it doesn't kill all the participants. It just kills the malinvestment, all the dabble money, the people that just throw away money at any idea that they saw. But the real legitimate companies, they will thrive and they will make fortunes for early token holders or shareholders of their companies. One of the things to really watch, and I know that you're aware of this, is that most exchanges are backlogged. So if you try to make a large investment into a currency, they don't allow it. Right. So True. People can only make a $500 investment or $700, etc. And if you want to go to thousands and tens of thousands of dollars in order to make substantial gains, what's going to happen in 2018 is you're going to see blockchain publicly traded companies, a connecting bridge between cryptocurrencies and blockchain through the stock market, the traditional stock market. And there you have no liquidity problems, and that's where the institutional money is going to go. Wealth Research Group in the first quarter is going to cover 2 new blockchain companies that are right now private. And we're looking at and watching them like a hawk to make sure that we're on there first. We were first on Hive Blockchain Technologies, for example, in September, and the stock went up 900%. It's still up 400% today from its inception, so it's a massive move in 3 months. Very exciting again.
Yep. And once again, that's this Friday coming out, the report on the top 5 cryptocurrencies, but you have to go to wealthresearchgroup.com to get access to that, and that's for everybody.
Well, you can also go to wealthresearchgroup.com/top 5, top and the number 5, and download that report in its entirety on Friday. But it's either way is good.
Yep. But once again, that's wealthresearchgroup.com/top and then the number 5. That will be in the description of this video. All right. So legalized marijuana. I'll bet people in California, at least some of them, are celebrating today because now recreational marijuana use is in fact legal in California under certain restrictions, of course. I believe you have to be 21, but still, this is huge, and it's huge for investors who are interested in this niche. So what is your take on all this and your outlook for 2018?
First of all, what's beautiful is that California is by far the biggest market in the world for cannabis. It's got 39 million people, inhabitants, and it's got a traffic of 250 million tourists a year. So this is going to be like a giant laboratory, a guinea pig for how the rest of the world will legalize, regulate, manufacture, etc. It's a huge deal. This is the tipping point for the industry. That's it. It's never going to get barred again or bombarded again with nonsense about the fact that cannabis is next to cocaine or whatever politicians are trying to scare you in order to keep the DEA payrolls going, instead of simplifying the entire structure of how the U.S.'s prison system and police system is working, because they can free up and do other things. Cannabis, with regards to its legalization, is going to open the door to new investors who are just not going to get involved in an unregulated, messy, illegal environment, and now they're going to come in. So the speculative gains, which we saw in 2015 to 2017, where companies just saw a lot of influx of money from a speculative perspective, that's going to be gone, because the competition is going to be very fierce right now, David. Legitimate entrepreneurs are going to come into the business, and you're going to see the weak companies, wither away and die. So now it's really time to put in the diligence into cannabis if you really want to make gains, because the good companies will soar because the demand is there. That's it. It's legal. So you're going to see all this illegal market moving into a legal market. If you can go into a shop or go into a dealer or whatever, right? You're going to go into that shop. You're going to see that variety. Everything has a quality control to it. You can shop. It's a better shopping experience. It's going to bring a lot of new people to the table. I'm talking recreational, medicinal. Don't get me started, because all these pharmaceutical companies that were sitting on amazing opportunities to develop the active ingredients, now they're going to have funding. Now they're going to be willing to work with the regulators in order to make scientific breakthroughs. So when it comes to relieving pain and sleeping disorder, etc., you're going to see new products coming into the market, and then you're going to see oils coming into the market, etc. The marijuana industry is going to be the fastest growing industry in the United States, with about a 25% a year growth. That's massive growth, massive hyper growth. And so as investors, what you need to focus on right now is to understand that it's going to take a lot more due diligence and a lot more work to find the best companies, because the competition is going to be fierce. I'm headed to California right now. Like next week, I'm on a plane because I'm checking out 3 new opportunities for Wealth Research Group, which we're going to cover in Q1 of 2018. So cannabis in 2018 is going to be one of our focal points with Wealth Research Group. And in terms of something that is also important, we talked about this. We talked about cryptocurrencies and we talked about cannabis. Both of these industries are begging for talent, begging for people who want to get involved and know what they're doing. The occupational opportunities with cryptocurrencies are amazing. People could get into $300,000 and $400,000 a year salaries if they know how to program. They can do the same thing if they know how to manage social media accounts, market, etc. The opportunities are amazing. Cannabis and cryptocurrencies are both industries which are cannabis even more are unsourceable. You don't outsource them. If they're in the U.S., they're in the U.S. If they're in California, they're in California. They're very viable career opportunities, and if you're not looking at them from an investor perspective, something you should think about is an occupational perspective, because it's a new field. It's all the opportunity in the world is right there at your fingertips if you have talent and skill.
Absolutely. I mean, the calls you've made in 2017 have, I hate to say it, but they've all come true. Actually, I'm glad to say it. I still get emails from people who are thanking me for your video recommendations. For example, Hive blockchain technology. They've made tons of money on that. Invictus MD for people in the marijuana space. I still get thank you notes for that. So I can't wait to see what's next. Yeah, it's really great. And of course, you're known for being an expert on the commodities space. There's so many to choose from, though. It looks like some of the commodities are making a bit of a comeback after a rough patch in 2017, let's say. So what is your top commodity right now?
Well, when inflation expectations are getting higher, the two commodities that are most important in terms of hedging are copper for the industrial reasons and gold for the political reasons. So if you want to hedge against inflation for political purposes, because inflation creates a lot of distortions in the economy, it provokes war between countries because it creates a lot of uncertainty. Then gold is what you're after. If you understand that the growth potential in the U.S. and in China is massive, if you understand that Europe is recovering, then you understand that these countries are going to need copper. The U.S. and Europe are going to need it for their a revolution with regards to electric vehicles and smart homes that need a lot of copper wiring. And China and India are going to need them for their initial expenditures on real estate, cars, etc. And copper is as you know, is at a 4-year high right now. It's traded up 14 of the last 15 days, so that's a huge record-breaking move for it. And copper stocks, some legendary people in the mining sector, when I sit down with them one-on-one, they tell me, look, gold is the one people love most, but copper is the one that people make money with most. After 2 years of researching companies with Wealth Research Group, we have just covered and published information about the only copper company that we ever found to be an extraordinary story. And again, like I said, go to wealthresearchgroup.com/inflation if you want the full report on it. As we're doing this interview, the company is up today about 45 to 50%. And the reason is the market is starting to gain notice of them. But as you'll see in the report, the potential is much, much higher, because in 2018, their roadmap, their milestones that they want to meet will increase their resource base by 80%. And so if you think about companies that double their resource base or go time it by 1.8, their share price historically is rise by about 207% in 1 year. So that's something to remember. It's a great stat. With regards to gold stocks, look, they have been suffering, and the reason is that half of them are sitting on non-economical projects. And when a gold company is sitting on something that's non-economical, why do you want to hold it, right? With gold moving up right now, a lot of these projects are going to get economical, and you're going to see them repriced. The best thing to do right now for a management team is to consolidate quickly, take possession of as much good assets as you can while the market is still bloody, and wait for the spot price to rise to about 52-week highs, 1370, 1380, and then speculative money comes in, and all of a sudden these companies, you've seen it, David, and we talked about this off the air, they go up 400, 500, 600% in a matter of months, because then they become real good businesses instead of businesses that are sitting on non-economical projects. And what I think is important is the same people that are behind the success of Hive Blockchain Tech, which was the most successful launch in Canada's stock market history. They have also positioned within a gold company in Nevada, like the motherlode of all gold regions. And so I've been following the story for in fact, just before the interview, I got off the phone with the CEO. Their roadmap for 2018 is amazing. And so I tallied up 72 days of research that we've done on this company. If you want to access it, go to wealthresearchgroup.com/gold 2018, just the number 20, gold and the number 2018, the year, and you'll see our thorough research on this company. What they're trying to do is go from 30,000 ounces per year production to 150, so 5 times higher, by acquiring other mismanaged, poorly run gold companies within Nevada. Their first acquisition was a operating mine that had $200 million invested in it, and they bought it from the bankruptcy, out of bankruptcy for $5 million. So a 97.5% discount to what was already spent on that thing. And it speaks volumes to the caliber of that team.
Absolutely. So just to recap, so far we've already got 3 downloadable research reports that you've done your due diligence on and put all your efforts into. One is wealthresearchgroup.com/inflation. Another one is wealthresearchgroup.com/top5, and then wealthresearchgroup.com/gold2018. These are all in the description below this video. You can just click on them. You don't have to type into your browser. And it amazes me. Whenever I put out a video, I immediately get comments, people saying, "Wow, I can't believe Lior Gantz puts out all these free reports."
I'll tell you what. Yeah. What happened with my story in my life was when I was 17, my grandfather gave me a book, and that book was called The Power of Mentorship. And in it talked about the fact that if you want to fast track your way in life, get a mentor. Because otherwise you'll just you'll do much more mistakes than you need to, and your growth spurt would be slower. And I compiled a list of 50 people in my area that I wanted to get mentored by, and I called them each, and they all said no. People think that a mentor is someone that waits around the phone to mentor people, and it's just not like that. These people, they have their lives in 24 hours, schedules all lined up. And so I did a second round, and in that round I offered each and every one of them something in return. I offered value, and one of them, which I offered, and I was 17, so I had that going for me. I was young and I didn't have a lot of obligations, right? I offered them to work for free for 6 months under their wing and learn from them. And that started my path into entrepreneurship and business. And wealth research was just my way of paying it forward. And I liquidated, or I sold a very successful real estate business that I launched in 2009 at the bloodbath of the real estate market in the U.S. Everything was on sale. I got in at the right time, sold it in 2013, and launched a boutique fund for around 20 well-to-do clients from 2013 to 2015. And then when we dissolved that fund at a huge profit because we got in on Bitcoin very early, I said, look, my model, I want to change it. I want to do my research and do my work and do what I love, and I want to share it with no threshold, with a bigger audience that can become educated, and empowered. So we do not manage money anymore. What we do is we do a lot of research and a lot of diligence, and we live our lives. And what we try and publish is the most actionable information that we can find, that are the top things that people need to know, because the mainstream media is doing injustice to probably every population on the planet by just regurgitating the same news that is not action. It's just general fluff, and it's not something that you can do something with. And I think it all starts with our educational system, but we won't go into that. What I do think is important is for people to take control and just take responsibility. And if I leave you with something, find a mentor, find somebody who's available in what you're trying to seek out and do, and just sacrifice whatever it takes, because that's going to catapult your life and just change it altogether.
Yeah, I totally agree. At Wealth Research Group, they are giving back to the financial community, offering these free reports. You don't have to work for Lior Gantz for 6 months for free. You can actually get his tap into his insight and his massive research base for free. It's something you don't find very often in life. So why not take advantage of it? Head on over to wealthresearchgroup.com and check all the links for the free reports below this video in the description. All right, Mr. Lior Gantz, I really appreciate all the time and you coming on my growing YouTube channel, which just passed 12,000 subscribers. So we're getting there. We're doing okay. We're growing with you, and you've helped me to do that, because I always get a huge spike in subscribers whenever you come on. So thank you, sir, again for this, and you're welcome back.
No problem at all.
Yeah, you're welcome back anytime, sir, on Looking at the Markets.
Thank you, David. If I can leave something with the audience, and I think it's very important, is in 2018, make sure that you work that muscle that's called deep thinking, and just do not take anyone's word as is. Research, do your own due diligence, dig into topics that you like, because you're going to find out many opportunities within those topics. And by becoming an expert in a very niched sector, you can find more opportunity than by being a regular investor in many topics. So find those 2-3 things that you really can excel at, and there put all of your efforts, and forget about the rest, because you don't need them in order to succeed.
Yeah, stay focused. And remember that
exactly.
And research makes you rich. That's what it comes down to.
It's true.
All right. And hence the name, Wealth Research Group. That's the key word, I believe, besides wealth. Research is a key word. Thank you, Mr. Gantz. I appreciate it, and can't wait to talk to you again soon here on Looking at the Markets. Thanks a lot.
Thank you, David.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.